Everyone knows about Tesla. Well, what are some other ways you can invest your money? We want to help the climate and we want to earn money along the way. This video tells about the things that I am actually currently doing with my investments to try to accomplish both of those goals. Earn money and help decarbonize the planet. Here we go. There are four major subject areas. We're going to put those on a menu here for you. How to invest, and as I move through those topics, you'll see me moving down that menu. The first one is carbon credits. What are they? How do you invest in them? The second one is electrification, right? Instead of internal combustion engines, we're moving to electrify all kinds of different things. What does that mean? What are some investment opportunities there? The next category is clean fuels, hydrogen, etc. We'll talk about that. And then the fourth area, believe it or not, is food production, carbon neutral food production. I have an idea there. That's something I've been investing in. We'll talk about. So let's go through these 4 areas and have some fun. Carbon credits, also known as cap and trade. So think about that, cap and trade. What does that mean? All right, well, government sets limits. So if you're in a certain industry, let's say you produce electricity in your company, the government will set a limit and say for every gigawatt hour of electricity produced, you are allowed to release this amount of carbon. Well, over time, they drop that number. Now it's a little bit less next year, and the year after that, it's a little bit less. If you make those investments into green technologies, then your company will release less than the allowed amount of carbon into the atmosphere. And guess what? You can sell that little bit of difference there. If you actually generate cleaner energy, you can sell that carbon credit to some other company that is slow and is still burning coal or whatever and is emitting larger amounts of carbon into the atmosphere. They're emitting over what they're allowed. They need to buy some of these carbon credits, and hopefully you're the company that is clean and is producing your energy below the carbon limit and you have extra carbon credits to sell. Well, there are exchanges. There are places, organizations that buy and sell these credits. So if your company needs credits, they go to the exchange and buy them off the open market, off this exchange. If your company has surplus credits, you sell those into the exchange. So the price of these carbon credits moves up and down based on supply and demand. Well, as governments drop down the amount of carbon emissions that are allowed, more companies will have to do one of two things. They will have to spend money to generate their products in a cleaner way, or they need to go into the carbon exchange and buy carbon credits. So it's my personal belief that carbon credits are going to increase, especially in the next decade. You know, at some point in the future, they may stabilize, like the price of oil kind of operates in a certain range, but at this point, we don't know what that normal range is for carbon credits because we are so far from a stasis type of a situation. CraneShares Global Carbon ETF. So this is an ETF that tracks the price of, they connect to the exchange on futures contracts. And as you can see here, by investing in this ETF, the price of this fund raises and lowers based on the price of carbon credits. As you can see here in in this year so far, we're up 39% in the price of carbon credits. The second one I'm doing is iPath Series B Carbon ETN. ETN is similar to an ETF, and they're doing almost the same thing. This one is up 59% this year. What's the difference between these two? Well, the CraneShares here, they not only are operating, or they're soon not only going to be operating in the government mandated carbon exchanges, but they're also going to be trading in tracking the price of carbon credits in the voluntary carbon exchange market. So that's an important distinction here. So CraneShares is going to be a little bit broader scope. GRN ticker here. This one is definitely more focused on just the compliance exchanges, which means the government mandated exchanges. Let's talk about carbon streaming. This is fantastic. This, I must admit, this is probably the riskiest investment I have in all of my portfolio. So what does Carbon Streaming Corporation do? Well, here's an example I put on screen from their website. The Marvivo Blue Carbon Paradise. This is a estuary, a water area that is mangrove. Mangrove are those plants that grow right in the bays and such, a lot of them in Florida. Mangroves apparently are really, really good at capturing carbon and trapping it and dropping it to the the bottom of the water there below the mangroves and such. Not to mention the fact that they're great fish hatcheries. So this company has decided to acquire this land, restore it, get the mangroves going, and then get that process certified. And then they will sell carbon credits into the carbon market for this land that they have created and designed to capture carbon and sequester carbon. So, well, they need money to buy the land and to restore the mangroves. Who's going to provide that money? Well, that's where Carbon Streaming Corporation comes in. And in this case, they actually did come in. So they gave them money to acquire the land, to work on restoring the mangroves. And then in exchange, once this organization, this company starts selling carbon credits, Carbon Streaming Corporation, guess what? Gets a cut of that. So forevermore, Carbon Streaming Corporation will get a percent of all the carbon credits that are generated and sold from this company that has restored this mangrove area. So the idea here is you do this over many, many projects, and you end up with a company here, Carbon Streaming Corporation, that has a steady flow of cash coming in as royalties and streaming from these carbon credits that are produced and sold into the open market. As the price of carbon credits increase over time, then the amount of money this company makes should increase over time. This streaming model is one that's used in the mining industry, so it's well known, except it's being applied here in a very unique way. So I personally have purchased shares of this company. I am very close to my upper limit of the amount that I will put into any one investment. All right, next let's talk about electrification. Well, from an investment standpoint, I focused on electric generation, battery technology, and metals that are going to be required for electrification. So again, electric generation, battery technology, and metals. So let's talk about electric generation. I have searched long and hard, and it's really hard to find a pure play here. Electric companies are starting to build out wind farms and solar farms and all that. Well, I wanted to find a company that just does the clean energy. So basically, I'm looking for an electric utility where all of their energy sources that they sell are clean. Solar, wind, offshore wind, hydropower, maybe the energy from decomposing waste or something. So strictly from clean sources. I found two companies that do that. One is Northland Power. This company is based in Canada. They are profitable. PE ratio is 36, which is a little high right now, but they are earning solid money. So what they're doing here is they're earning money from the projects that have already been developed, and they're using that to develop more projects. So they're in this growth mode. Look at this dividend, 2.7% right now. As you can see here, they've had a little peak. It's down a little bit from the peak. This is one that I have maximized out. Again, I've got this limit on how much I'll do in any one investment. I hit that limit on this one. There's another company based in Denmark called Orsted, does the same thing. And so I have purchased Orsted, but I'm actually going to fade and sell these. And the reason is, the shares are done in the U.S. with an ADR, and the bank that sponsors the ADR takes a cut off the dividend. So they're taking 25% of the dividend. So here you got a 1.2% dividend. I'm getting like 0.9%. That irritates me. And since I have an alternative with Northland Power, I'm going to fade this one. In addition to these two energy generating companies, I also have owned First Solar. But I've decided I'm going to sell out of my First Solar. So I put trailing stops underneath it. So I've had good run up on it. I'm going to sell it in 2 or 3 chunks as the price, the trailing stops followed up, and I'll just kind of sell in a couple of chunks here. They've decided they are going to focus exclusively on solar panel production. That's fantastic. Somebody has to do it. I do think that's probably a more competitive market as opposed to the other services related to solar power. And it's also subject to technology obsolescence, right? Somebody will come out with a new technology that makes a better solar panel and has a patent on it, so suddenly you are at a disadvantage competitively. So I love that First Solar is in this business. Love the company in that sense. But from an investment standpoint, I've decided I'm going to get out of it. It's also more cyclical, right? If we have a recession, there will be fewer people with the money to invest in solar projects and such. And also, it might be interest rate sensitive. I suspect that people are borrowing money to build out some of these larger solar farms. I thought about buying into companies that operate nuclear power plants. Well, first off, it's hard to find a pure play there as well. You do have Westinghouse, which builds the power plants, but from an operator, somebody like Duke Energy has, all kinds of different power plants. They have nuclear, they have natural gas, and a little bit of solar, I think, and all that. But it's not a pure play on nuclear. So I decided I currently don't know where to invest money on a nuclear plant operator. So basically, an electric utility that only runs nuclear power plants. If you know of such a thing, let me know. Now let's look at battery technology. So we're still in this electrification section. I bought this company, Nano One. It's a Canadian company. They were doing research on more environmentally friendly ways of producing batteries. And they've been working at this for many years. I actually bought their stock in October of 2017 at 92 cents a share. That stock has done well for me. I sold part of it. You know this idea where when you have a big run up, you sell and recover all your monies, then you let the rest just run. Well, that's what I've done. The rest is just running here. This company actually is intriguing to me. I actually might go back into it and invest some more. If you look at the deals they have various partnerships. They're setting up the companies now. Their technology, they're up to like 30 some patents applied for just on the design of battery cells. They have some unique technologies here that reduce the toxicity of the wastes and reduce the amount of energy required to produce batteries. Fantastic thing they're doing here. Anyways, I like that. That's in my portfolio. Another one here is QuantumScape. Remember, QuantumScape was all the rage here a while back. There was a big burst here. I brought up their chart. Look at that spike here, way up there. I bought some right about, about here, I guess, and it's down to 22, so I've lost some money on my initial investment. I normally scale in multiple chunks, so don't worry, I didn't lose much, but I'm very interested in what this company is doing. They have an earnings statement or earnings thing coming out soon here. I'm investigating this, whether I should go back into it. Look at this, stock price at $23, earnings per share of -$6. Is this company sustainable? Now, there's rumors that there's some people with deep pockets behind this company, but I don't know. A little concerned, but I'm going to investigate and perhaps put a little bit more money here. And now for metals. Now we talk about electrification, and electrification requires more than usual, more than in the past. It requires more copper and nickel, and there are some other lesser known minerals. Cobalt is one, but the battery producers are trying to get away from using cobalt. Cobalt is pretty rare and has problems with where it's mined and that sort of thing. So anyways, copper and nickel. So what I've done here is, this company is called Nova Royalty, and it's a fairly new company, a lot of risk here. I wish they had some royalties that we're about to start paying sooner, so I'm a little bit concerned with, can they make it all the way to getting some of these royalties that pay off. But basically, this is the mining business. Copper miners, nickel miners. So the idea here is similar to what we talked about with Carbon Streaming Corporation. So you are so somebody has discovered a resource, a mining resource. Here's a bunch of copper in the ground. We know how to mine it. Drilled a bunch of holes, have a pretty good idea of how much is there and where it is, but they need money to build out the mine. It takes a lot of money to build a mine with all the equipment and such. So this company specializes in, again, stockholders buy the stock like me, right? And then the company takes that money and uses it to give to these companies to develop the mines. Then what happens is that they get a percent of whatever comes out of the ground forevermore. I also have invested in a company called Southern Copper. Southern Copper is an established miner that currently mines copper, so it should be fairly price sensitive as the price of copper goes up, which I expect it will. It's already gone up and come back a bit, but I think we're in an uptrend here. So the price of the stock should be sensitive to the price of copper, and the profits of the company should be kind of levered to the price of copper. So I expect the company to be increasingly profitable, and they do pay a little dividend, so I'm watching that. Dividends are good. Let me tell you what I'm not invested in. Lithium. Lithium is a metal that is mined, that is used in all these lithium batteries, right? Well, this is a good example of how bad information can really hurt you as an investor. I read somewhere in a mainstream magazine an article that that there was a limited supply of lithium, and that companies were going to have to find some other materials to use in batteries. That was just incorrect. There's actually a lot of lithium in the Earth's surface, and so it's not an issue of how much there is. It's more an issue of, is it in convenient places and such. But because of that, I did not invest in lithium early, and I missed a window there. I think I've missed that window. The mining companies are established, and I believe the sourcing on that is pretty well established. I don't think there's, yes, there's some money to be made, but I think the big wins in investing in lithium, in my opinion, for me, are past, in this cycle at least. Graphene. Graphite is used in some batteries. Does have some other uses in electrical as well, but there's a couple of problems here. One is it's a substitutable metal, so there are some alternatives to it. The second is the mines vary. There's different crystalline structures of graphite, and certain ones work better for certain applications and such. And to me, this was just too complicated, so I made a choice not to invest in graphite companies. And finally, I want to mention that there is a new royalty company, mining royalty company, that specializes in this electrification trend. In fact, their ticker symbol is ELEC, right? The first four letters of electricity. I've decided not to invest in that. I actually owned a little bit and sold it. And the reason is, I think it's too far out in the future before they will start earning royalties off these mines that they're investing in. So I'm not sure yet that they have enough capital to get from here to there. All right, the next category here is clean fuels. Let's talk about clean fuels. So hydrogen first. So, we talk about cars being battery and charging electric and all that. Well, that's fine, but even with the forthcoming technologies like solid-state lithium batteries, we still may not have the density and the amount of storage capacity in batteries that we want. We're getting closer, I must admit. But I think for big trucks and such, we may still end up in a situation where the infrastructure is not in place for electrifying semi-trucks and large trucks and people who drive long distances and such. So I do think, to me, there's no question that we will have hydrogen fuels, certain things fueled by hydrogen. The question is what's going to be the balance between battery-operated vehicles and hydrogen-fueled vehicles. So nonetheless, I'm convinced that hydrogen is going to be a fuel source for transportation, and this is going to take about 10 years to develop. So how am I investing in this? Well, because it's so far out in the future, I was a little bit concerned with investing in hydrogen companies that are strictly trying to develop new technologies, and they really don't have any real products. I did find two companies that have real products, and they're slightly profitable or close to profitable. And what that does is that buys them time to develop and expand their marketplace. What you don't want to do is invest in a company that has a great idea and can't make it to market, doesn't have the capital to get to market. So let's look at these companies. First investment I made in hydrogen area was this company called Nel. They're based in Norway. They're involved in developing the technology for taking water and splitting it into oxygen and hydrogen. Fantastic idea, because you can power it with the sun and with wind, right? And renewable energy, but also hydrogen fueling stations. So this is their established product here is, we have gas stations, right? Well, you're going to need hydrogen stations. Well, they're actually installing hydrogen stations in Europe. So I believe they are the market leader in this, I'm not sure. And so they have this real product where there's already some demand for hydrogen fueling stations, and it's increasing, especially in Europe, a little bit ahead of the US. As you can see, they had a peak in their stock price here. There's all these alternative energy companies had a spike up after the US presidential election was settled, knowing that Joe Biden was coming in and we'd reattach to the Paris Accords and it'd be this environmental thing. Well, anyways, so we had a burst of prices there on all the alternative energy things, and of course we've come back down. So I bought in here somewhere, I don't know where, I lost a little bit of money, but like with QuantumScape, I think I'm going to take another look at this and I may increase my holdings here. But so far, I'm not totally sure. Look at this, they're making a tiny little bit of money. The PE is not too ridiculous. So this is a hydrogen play that's not a hope and a dream. I mean, they have real products. I've invested in that. All right, so the next company I invested in was called Ballard Power Systems. So what do? Well, they make fuel cells and systems for powering vehicles. So the idea is you have hydrogen, and that fuel comes into the fuel cell, which converts it to electricity, and then you drive your vehicle with electricity. Or you have a backup power generation system that you're generating electricity that way. So anyways, real products, they're in the market. As you can see here, they also had a price spike. It's come down. I did my initial small investment to learn about it. I kind of figured out this pattern there. Luckily, I didn't lose much, but I'm thinking I'm probably going to buy more now. As you can see here, they are not yet profitable. They are close to profitable, but not yet. But nonetheless, it's a hydrogen play with real products that people want. I'm in. The next way I invested in an economy that is partially hydrogen based is with platinum. So as you know, platinum is used in catalysts now, catalytic converters in gasoline automobiles, and everybody thinks that when gasoline automobiles go away, that nobody's going to need platinum anymore. Well, guess what? I just talked about fuel cells. Platinum, okay? Platinum is used in fuel cells. So platinum has another life. So I have invested in 2 platinum mining companies. Now, I'm a little bit embarrassed to say this, but I'm being honest with you here. After I made the investment, I learned just how energy intense platinum mining is. All mining is not the most clean thing, right? But the amount of electricity used in platinum mining is just unbelievable, and refining as well. In fact, it's so bad. This is really bad. So in South Africa, this company plus the next one I'll talk about, in South Africa, they're actually burning coal to generate electricity. Massive amounts of coal being burned to generate platinum, which is used to reduce toxic emissions. This is nuts. It just doesn't make sense. So I was about to sell everything here and stop buying any more platinum. But both of these companies I talk about just recently announced major initiatives. They're installing massive solar farms, generate their own electricity for their mining operations. Saved by the bell. I was about to dump these things just out of embarrassment, but I think I'm going to give it some time. Now, as soon as I pick up any foolishness here that they're not serious about what they're saying, then I'm going to sell these things just out of embarrassment. If they can generate the energy to do the mining in a clean way, then we have a metal that can be used for hydrogen-based economy, as well as cleaning up toxic emissions now until we get there. So I actually am a little bit bullish on platinum, more so than most people who are involved with precious metals, because of these reasons. I think it has a play in the hydrogen economy. Platinum will live on beyond gasoline engines. All right, so here's the first company, Implats, also known as Impala. You got a little language issue here as to how it's spelled. IMPUI is the ticker. And this company is profitable, pays a 5.5% dividend. Look at that PE ratio of 5. A PE of 5. A PE of 5. Unbelievable. And the price has come a little bit off its 1-year peak here. Anglo-American Platinum, similar situation. You can see I had a peak here as well, and it's come down a little bit. This one has a 2.5% dividend, a PE of 15. Again, these PEs are unusually low. These are fairly profitable companies. So that's how I'm playing the hydrogen market. A couple of companies with real products and also platinum. The other clean fuel I wanted to talk about is uranium. Now, uranium is not perfect, I admit it. But a nuclear power plant has 0 carbon emissions. 0. Try to beat that. I mean, that's like solar and wind. Yes, sure, there's some carbon emissions involved with building the plant and mining the uranium and all that. But nuclear energy can produce massive amounts of electricity with 0 carbon emissions. It has to be a part of our energy future. It just has to be. And I think a lot of people are realizing that. So I've invested in a couple of companies here, a couple different ways. So let me explain what I've done and why I did it the way I did. The first one here is a company called Energy Fuels. So they simply are an uranium mining company. They are doing uranium recycling. As you can see here, they're a little bit off at peak right now. So I bought some stock here in Denison Mines. And there's a couple things. First off, they are developing uranium mines, right? So involved in that process, and the demand, I believe, for uranium will increase over time. in the next, certainly we have a solid demand for it for the next foreseeable future, the next 20, 30 years probably. So they're involved with developing mines. But they also have a couple of cash flow generators between now and then. So they're involved with a uranium processing plant that other mines are currently using. So they're involved with, have ownership in this plant, so that's revenue generation as they're developing mines. The other thing is that there are actually some mines that are closed, and there's some minor maintenance that needs to be done on closed mines. So they provide this service for some other mining companies. So this company has some revenue streams to help it get through this development phase into the point where they can have major, significantly more revenues and hopefully profits as they're mining uranium. Next one is a company called Uranium Royalty Company. Well, by now you've heard me talk about streaming and royalty companies. Same idea. So people like me buy their stock, which gives the company money, and they take that money and they give it to people that are developing uranium mines, and in exchange they get a percent of everything that comes out of the ground. Okay, forevermore, as long as there's uranium coming out of that mine, they get a percent of it. So Uranium Royalty Corporation. All right, our last category, food. Generating food in a carbon neutral manner. I set off on this journey of trying to find a green food production company. I found this company in Canada called Maple Leaf Foods, and they are just now celebrating 1 year of carbon neutral. So they're producing all this food, and the company's carbon neutral. And if you look at their materials here, they are nuts about this, and they've been crazy about this for a long time, sustainability in their food production processes. I am so impressed. I purchased into this company, and they also are profitable. Look, you have a PE of 19. Imagine that, a carbon neutral food company that is profitable with a PE of 18.8, about a 3% dividend. I can invest in this with a clean conscience, and you know I love dividends. If you've stayed with me all the way to the end of this video, you are a rock star. So anyways, I've gone through these categories, told you what I've done. I'm happy with these investments, although I've got a couple that, as you know, I'm on the edge of maybe selling. I feel good about this. So this is a significant portion of my portfolio, and I'm passionate about this. I want to invest. I want to earn money for the future, for my family and my retirement, but I really want to do it in a good way. I want to do it with a clean conscience. So these are some of the ways that I'm doing it. Listen, the God of all that is loves you very much. Embrace it. Go for it. Have a great day.